very busy week for earnings with a bunch of the S&P 500 reporting, and we're getting over 800 companies expected to report, including many of the big kahunas, so to speak, the Fangman, Microsoft, Google, Amazon, Meta, Apple. A bunch of them are reporting, but I'm not talking about them today because I've already covered Fang on these videos. So I want to talk about other areas that you should also be watching. There's many of them, as I just mentioned, but one of the key industries to start really reporting in big numbers this week is energy. And we're going to get a host of different types of energy companies, including big oil and one of the producers, but most of the rest are coming later, but we are going to get one of them. And then a couple of the refiners are also reporting. What do these charts all look like? They've sold off in the last month or 2 months here. Are there some deals here? What do their earnings track records look like? Let's dive right in and see. So the first company I want to talk about is Matador Resources, ticker MTDR. And as you can see, there's really nothing wrong with this chart, right? They have a perfect track record, massive beats in there. The only one little snafu is the recent sell-off in these shares, down 8.7% over the last 3 months. So, well off its highs there. And stock is dirt cheap because those earnings keep rising. So Matador is the producer that's going to be reporting first, the first of the producer industry, so to speak, to report. So they're kind of going to set the tone. But if this chart is anything to go off of, it's going to be a good tone, right? They're trading only at 4 times earnings here. As I said, those earnings are on the rise. And Matador is going to lead off a very hot earnings season on the producer side. Then we're going to switch over to the refining with Valero Energy. VLO is the ticker here. It hasn't mattered that it's in refining versus producing because, as you can see, the shares are off here too. So I did the 3-month look and these are up, but just 1% during that time period. So this could be a buying opportunity in Valero as well. PE of just 5. It is a Zacks #1 rank. Strong buy as those earnings are expected to rise and the analysts are already raising them. It also pays a dividend yielding a nice 3.8%. So things are looking good here, even on the refining side, although the crack spreads have narrowed here and gasoline prices have fallen down. So you do have to watch for slightly different things with the refiners than you do with the producers. So keep that in mind. Then we're going to switch over to big oil. Exxon Mobil, set to report at the end of this week. It is coming off a miss. So suddenly you can see that this earnings chart isn't quite as good as the last two. So big oil's been more iffy on the meet or the beat. But as you can see, this stock is following what the others are doing in terms of, the rise through just about a month and a half ago. And so these have come off those highs too. They are also cheap with a forward P of just 7.6. It's a Zacks #2 buy stock, so not quite as elevated as the #1s. And year to date, still up 42%. So nobody's complaining about that if you've owned it for the whole year. Dividend is now yielding 4%. So that's still juicy. And Exxon, remember, is multifaceted. It's got the production side, but it also has the refining side. So kind of a combination of the other two. It's also has a big petrochemical business and natural gas. So this is maybe the most complete of the US oil companies in terms of all of its different segments. So this is going to be one to watch. Then we're going to switch over to the other big oil stock also reporting on Friday, Chevron, ticker CVX. And it's had a bit of a rough go of it the last couple of years since the pandemic started, much more so on the earnings miss and beats than Exxon, coming off of those 2 misses, which is kind of a surprise given what has been happening. But it's just maybe not articulating what it's seeing in its business as well as some of the others in terms of letting the analysts know where they stand. PE is at 8, so just around where Exxon's is. It also is a number 2 buy. And year to date, these shares up 22.9% because they're down pretty sharply over the last 3 months and now down 10.4% during that time period. What does its dividend look like? It's now paying 3.9%, and a little surprised to find it's a little bit under Exxon's because Chevron used to pay higher than Exxon back in the day of 5 or 6 years ago, but now it's slightly under what Exxon is paying. But either one, you're still getting quite a juicy dividend there. So you don't have much to distinguish just based on the dividend between those two. And then we're going to wrap it up with another refiner, Phillips 66, ticker PSX. It only has the one miss there in 2021. Otherwise, it would look pretty perfect like some of the others. But these shares, too, a little bit rockier. They are off their bottoms, and they were extending this rally here in 2022, but also have sold off. So over the last 3 months, they're up, but only just 1% during that time period. And year to date, up about 17%. It is, of course, dirt cheap, trading at just 5.8 times. It is a Zacks #1 rank like Valero is. So the analysts clearly like the refiners a little bit more than they'd like the big oil in terms of those rising earnings estimates into this earnings report. But this one also pays a dividend yielding 4.6%. So all of these, other than Matador, which is only yielding 0.4 for now, but they may pay a special and they may have a share buyback at Matador. You really have to dig deeper on those producers. But all of these areas, the entire earnings or energy complex is seeing really big cash payouts, either in dividends, share buybacks, or those special variable dividends back to shareholders. So if you're looking for income, this is the place to go. So I know what you're thinking, that with all those earnings reports this week, why focus on energy? Because it's the one sector really that is seeing rising earnings estimates with those great Zacks ranks of #1s and #2s. Can they continue to see the earnings growth this quarter in Q2? And will it be the record in free cash flow and earnings that everybody thinks it's going to be? I think it is. So that's why I wanted to focus on it. But never fear, I'm going to be covering some of your other favorites this week and all throughout earnings season. So be sure to subscribe at Zacks.com/YouTube. Watch my Twitter feed because I'm going to be posting a lot of the same similar charts as these are on my Twitter feed. So you can check all of those out on there, including some of your other more popular favorites that I didn't cover on this video or other videos this week. But be sure to tune in somewhere on Zacks.com for all of our earnings analysis because there's a lot and we're only just getting started. So be sure to watch all of our earnings videos here. I'm going to be bringing you them every week, and I'll see you again next time with some more charts.